Uh, Good afternoon, everybody. It's 12 noon. It is Sunday, and it is October 4th, 2015. And welcome to this week's rendition of my top-down review. Being that it's noon on Sunday, futures are not out and are not complicating this presentation. Here's a lovely view of the Amalfi Coast, where I had the opportunity to go this spring with my lovely wife to celebrate our 30th anniversary for the 18th time in a single year. It is our 30th anniversary, but it seems like we've been celebrating it for an entire year. And actually, the anniversary was a couple months ago now. So, today's topic is reversal, a one-day wonder, or start of the new rally. Time will tell. Let's see what the clues give us today. Disclaimer, as always, this is for educational purposes only. Any recommendations are in the spirit of education and should not be considered investment advice. I'm a doctor, not a broker. I am not affiliated with any software vendor, traders, or trading company. The tools I demonstrate are those that I use in my daily trading. I have paid for all the tools that I demonstrate. No one pays me to say good or bad things or to use their products. Trading involves risks, and you alone are solely responsible for any investment decisions that you make. I've had lots of influences. I do this every week. So let's just say I started in canceling with O'Neill, had it improve with Morales and Catcher, Ian Woodward and Ron Brown, a little bit of Elder for position sizing and psychology. John Person really made my difference by teach me really about how to take the trades, what trades to take, stops and losses, and his very popular signals that are on TradeStation and other packages. In fact, I run a user group independent of the company for no cost called the Pug Group for those that own his indicators. And then Van Tharp for position sizing and money management, and my buddy George Lee. What I need in my desert isle besides high-speed internet, I need trading platforms and I need analytic tools. I use TradeStation and Thinkorswim. I also use Genesis, which I think is the best charting package but prohibitively cost because it's not provided by any platforms or trading platforms rather. I use HGSI predominantly for my end-of-day and intraday analysis, some EdgeRater, especially on the weekends, and then I do seasonality and various websites to supplement. Interesting week last week. After Tuesday, I thought I was in sort of tough place with my portfolio because I was a little bit too exposed to the long side on some of my longer-term positions, shorter-term mostly not. And then we had a massive turnaround. And if you look at Friday, for example, you could see a sea of green, except there was some areas of weakness, financials, especially if rates are going down, transports, as oil seemed to go up a little bit at the end of week. And if transports are down, if we take a quick look at where energy is, you can see pretty much a sea of green as well. Major markets told the story. You look here at the E-minis, the NQs, the YMs, the TFs, and you can start to see why a lot of people are talking about that perhaps we had a successful retest. All I could say is despite horrible employment numbers and massive dumps off the open on all these indexes, I was quite impressed with the level, the reversal, and closing on the highs across the board. And in fact, if you look here at, again, the E-minis, the NQs, the TFs, the NYSE, and the YMs, you could see a number of daily person buy signals coming in on Genesis on Thursday and Friday. You can see we ended on the highs of the day. This is an hourly chart. And weeklies, we started putting in some bottoming tails. So it would not surprise me if we don't have some momentum to the upside. That seems to be the direction of least resistance right now, but it remains to be seen whether or not this was a successful retest and are we on our way back up as we were in 2011, which we talked about here for several weeks, or is this just a head fake and we're going further down? Time will tell, not out of the woods yet. Now, one of the things that I think is a big negative for the market right now is interest rates closed at 1.989. These are the 10-year Treasury yields. Now, what I've noticed over the last several years is that when we break below 2, not in the setting of additional easing, it probably means concern about the economy. And certainly what we saw with the unemployment, as John Person likes to call it, unemployment report, which was somewhat underwhelming, to put it mildly, that we've really broken down below the trend line and really below 2%. Now, as I've said before, falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. Rising rates are good for banks, so no surprise to see financials weak on Friday. Now, here's the AD lines. One of the things that you would hope to see is that the AD lines start to turn up and lead this market higher. On the daily here, there was a turn up, but boy, that's such a short-term move. On the weekly, hard to even see anything. So let's see, I take out this peak here on the AD line and start to get higher highs on the daily AD. I certainly will feel better about this market. Participation, here's the number of stocks above the 200-day SMA, and you could see this was a trend line that I written before. It actually had to do, I think, on the daily chart going back further. But most importantly is we're below trend line support on the number of stocks above the 200. And this is a mistake. Hold on, let's see if I can fix that. I can't fix it now. I'm supposed to have the 40 there, but I have the 200 twice. Canaries in the coal mine really going sideways after the big August dump on August 24th, struggling to regain the 50. A lot of the big players are in here, and certainly they've not all been acting the same. Amazon has been doing very well. Apple's struggling. I think you know the rest. Market thoughts, big reversal on Friday leads to a positive week. Many individual stocks in corrective mode, and strength was seen in utilities and REITs, some semiconductors, oil explorations and refiners, and even selected metals. You could argue that many of these were sort of relief rallies on things on the bottom on Friday, especially with the dollar weakening and the euro strengthening. Longer term, I still think this looks a lot like 2011. Maybe this was the leg that washed us out and we start to head back up, but it still could be months before we get to new highs. Still a question, is the correction over, or are we still in a topping period? Slowing worldwide economy versus full employment continues to put the U.S. on a hot seat. I guess the weak employment numbers potentially push a rate hike out. Risk management remains prudent. Now, October is really a wonderful month. Many lows are put in during the month of October. So the bad news is it can still form a low, but this is when we start to move higher into year-end rally time. And did last week's retest open the gates for a year-end rally? Time will tell. Remember, patterns are cyclical. We've clearly been in the dropping side. Are we down here where we start to bounce off the bottom? And will we see new buy signals? Now, if you're an IBD person, we're back in a confirmed uptrend. They look for things about movement of the indexes with higher volume, and they had their signal this past week. So that might be a good sign. I'm still going to let the market tell me what it's doing. And again, how I approach the market really depends on where we are. We may start to look at buying more stocks and calls, selling puts below what now will be longer term support. Bull put spreads, a number of things that I can do, covered calls, to play the market as it starts to go back up. Know your news and earnings. Not a long list. I think the energy numbers, as always, initial and continuing claims. FOMC minutes might also be very telling. These are for the September minutes, which, if we remember, a lot of talk about rate increases at that meeting. So it'll be interesting to see what the minutes come up. They may actually be moving. And wholesale inventories. Not much in the way of earnings. We used to say that Alcoa, which is down here on Thursday after the close, kicked off the next quarter's earnings seasons. Probably not as relevant as it once was, but that does tell me that the next quarter earnings are around the corner. Charts of the week, just for review purposes, these are presented for educational purposes only. Trading, especially options, carries substantial risk. I do not warrant any expectation of return, and I may or may not already have an open position in stocks presented. Hint, I may be front-running you, not that I have enough people that watch this to make a difference in moving a stock. I plan on taking the trades that they execute so I can discuss on the following session. I'm doing this not to provide stock tips, but to openly discuss how I take the trade, why I choose a specific stock or option strategy, and where I would plan on taking profits or placing stops. So last week I had a bull and a bear choice, and let me tell you, you don't want to be making stock calls when you have a midweek reversal to the extent that we had. We were bearish thinking about last week, so one of my bullish plays was a tobacco stock, Reynolds American. I joke that I don't usually buy these because I'm a cancer doctor, but I couldn't resist. All my technicals were green, mobile breakout from a squeeze, off of support here, and a big kahuna to the upside. When I looked at it, the plan was to buy it at 43.05 and then take a target at 46.50. To be honest, anything I'm buying now, if I get a gain, I'm taking it off the table and moving my stops to break even very quickly, if not closing the position. So this white line was the point of potential taking a buy, and you could see that we broke above it at the open on Monday, and you could have gotten in right about at the buy point. It rode up nicely on Tuesday, Wednesday, and then had sort of a parabolic move into Thursday, and then settled down for the day with a big reversal. At this point, you have no reason to still be in the stock. I got stopped out, but what I did is, you can't see it here very well, but we actually ran up to resistance on the weekly on Thursday, and I took half of my position off at this point, which was at about 45.20. And why I did that was just because of overall market conditions and my concerns about the market. If I was much more bullish on the market, I would have held this longer, and then I got stopped out the rest on this bar with a trail. The bearish put I took was Edwards Life Sciences. Now, the reason for the bearish put was pretty clear. Everything was turning red. We had a mobile breakdown. We're sitting right on the 200. Now, that's a great place to expect a bounce in the market. So you put your stop below the low of the day, or your buy stop rather, and if the market goes up because of a strong market, then you don't get filled on your short. So, and then we had a kahuna to the downside. What happened? The plan was to buy it if it traded below the low of the day, or short it if it traded below the low of the day, cover it with a stop right here, which was the high of the last several days. And what happened? We actually broke down nicely the next day, and I got filled, but very quickly we reversed, and I decided before the end of this day, since we took out the high of the bar that got me in, that I was just done with this, that I thought it was too risky that we were going to reverse. So I took a teeny weeny loss and got out of the trade. Now, I should have stopped and reversed. And interestingly, you can see that on this, you had a stop and reverse signal come in here, which is this red going to green. I elected to just close the position. I could have waited till it got to my stop, but with it pulling back up into the pivot moving averages, taking out the high of the day that triggered me to get in there, I just wanted to be off the table. So I did make the trade. I got out quickly, essentially a break even. Tonight's agenda, you had my introductory comments. We're going to do a market review, bottoms up, and then I'll review the charts of the week for next week or this week. And then upcoming events, Greg Mills meeting, the PV meeting, and the John Person meeting. For any information on these, I have nothing to do with the first two, and I'm only a speaker in the third. I'm the speaker in the first, but I can send you the links to the people that are running them. I know that Greg has 2 seats left. So there you go. You can cheat and see what my stock of the week is, but it's not a simple one, so don't jump and do it without listening. So let's quickly look at the market review. Hold on one second. Okay, so here is my, from using HGSI group performance analysis, you could see on the week from a close of the day Friday to close on Friday, the S&P 500 was up a little bit over 1%, outperforming growth stocks, where the HGS 100 was down 1.1%. The HGS 100 really was only 38 stocks that made the criteria. And the IBD 50 was down 0.31%. My buy picks for the week were 50-50, as you could see, and flat, which I guess makes me feel better than the market, but it was, frankly, I'm feeling pretty good right now, because if you had looked at my numbers after the open on Monday or even Tuesday, Wednesday, it wasn't so pretty. And if you have any long positions, you know what I mean. As I've said multiple times, we're not going to see a Hindenburg for a long time. We're going to have to get back to highs. And right now we only have 0.32 new highs. We actually worsened on Friday with 7.69% on the NYSE new lows. So that's interesting, that despite the fact that we saw the averages finish nicely, we had expansion of the new lows, but we're still a lot better than we were a week ago. The buckets, we've come off the worst numbers, and now we can see that we're 60% below the midline and very few stocks below the lower Bollinger Band. You compare this to that was the second, here is 928. So just going back to Monday, and you could see we were at over 35% of stocks below the lower band, certainly triggering a big number and not surprisingly a reversal. The markets, talking about the 28th, 28th we had kahunas to the downside, and followed by the 30th and the 2nd with some kahunas to the upside, and you could see the Woody indicator has gone to more of an intermediate from a clear-cut sell signal. From a seasonality perspective, let's just see if there's anything to see here. Let's just look at 1 month performance from here. And let's see if we can see something that it's actually something that is a big deal. So, a lot of foreign stocks here. Small caps, up 9 out of 15 years, 2%. Mid caps for the next month, up 50-50, up 2%. S&P growth, S&P 100, up 9 out of 14 years, up 1%. S&P 500 up 9 out of 15 years, averaging 1% over the next month. The point that I'm trying to show here is the vast majority of the major indexes, country sectors, etc., are up over the next 30 days, although the numbers being 1 to 3%, with China being an outlier. Now, it'll be interesting to see, because China's been weak. They're closed until the 7th. This gets to be a seasonally strong part of the year for a big part of the world. Even the FTSE, 7 out of 10 years, Chinese 25, up an average of 3%. That could foretell good things for the market. And again, as I said, October is often a market that we see major bottoms. Jump into TradeStation, and let's go to here. Excellent, excellent, excellent. So let's go and look at elder and person signals on the indexes and the sectors. What a difference a week makes. Let me add the monthly buy signals here. So for those who've not been here before, I use this chart as a vehicle to take a look at the market and get an assessment of where we might be going today. I use this on my indexes. I use them on the futures. There should be no difference between the indexes and their futures. I look at a number of things. This is a daily, a weekly, and a monthly chart. The green and red arrows are John Person buy and sell signals. Used to have dots, but now I got nice little arrows. The color bars are colored not by whether the stock closed up or down on a given day, but the color bars are determined by a Alexander Elder impulse indicator. When it's green, the buying window is open. You have permission to buy or hold. You should not be shorting. When the bar is red, you have permission to short or hold. You should not be buying. Now, one of the problems that we've been having is we have different results from different time frames. So as we look at the NASDAQ, I'll point out the other things that we look at when they show up. We have a green bar and a buy signal coming in on Friday on the NASDAQ. That's very bullish. We're just turned blue, which is nice on the weekly. We're still in a sell signal, though, person-wise, on the weeklies. When I see a buy in the short term, but a sell in the long term, I still have to be concerned that this is a retracement in a downtrend and be careful about going all in until I have more confirmation that this is a new uptrend and not just a short-term move. Could be setting up for shorting the market again, for example. But the NASDAQ on a new buy on the daily. The Dow, same thing, blue and red, almost the same, identical. Same story. S&P 100 went to a buy signal on Thursday, turned green on Friday, blue and red in weekly and monthly sell signals. The semiconductors in a buy, blue and red, same picture everywhere. And the S&P cash markets went to a buy on Thursday, green Friday, blue and red. So it's kind of interesting where we really see the same pattern on each of the major indexes, at least a short-term bounce. And it will be interesting. Sorry about that, but my wife doesn't like to answer the phone when it rings, even when it's her sister. There she goes. All right. So we've got across all the major cash markets, we have a short-term buy, still cautious on the longer views. This is how a rebound starts, and you typically won't get everything turn green at the same time. The E-minis should look like the S&P, which they do. The NQs should look like the NASDAQ 100 or the Qs, which we haven't looked at yet. And you could see the same picture, person buy, green, blue, and blue. So perhaps the first time we're seeing blue across the board on the right. So the NASDAQ 100 looks a little bit stronger. The YMs, these are the futures on the Dow. Same thing, green. And then sell signals with the blue and the red. Quick look at the Russell, rather. We haven't looked at that yet. The Russell shows me a blue and a red, but a new buy signal from person. So short-term buy signals throughout, which is a really nice thing to see. Quickly at the sectors, here's materials. Base materials had a lot of strength on Friday. You could see a new green bar here, blue and red, and a new buy signal. Long-term, still in a sell on both the weekly and the monthly. Energy, again, nice move on Friday, big move. Now you see these dots here at the end of the price bar. That's MACD convergence or positive divergence, and that's often a sign that a index or instrument are looking at potentially reversing, even turn blue on the weekly. So energy is showing a sign of life here. It'd be nice to see some arrows coming into the upside on the longer time frames. Finances, these ones got punished because of the lowering rates. Still in a person buy, but you could see had a tough day on Friday. Industrials, XLI, on a buy, green, blue, and red, looks like the Dow. Technology, blue on the weekly, but sells on the weekly and monthly from person. Nice looking on the daily. Staples, looks good on the daily, blue on the weekly and the monthly, but in a person sell signal. Utilities have been moving the longest, and because they've been moving the longest, not only they're in a daily buy, but they're in a weekly buy, green bars on both the daily and weekly, and a blue on the monthly. So utilities showing a lot of strength here, again, with interest rates falling and also being a nice dividend payer. Healthcare has had some challenges, but notice a big move up on Friday in a green bar, blue on the weekly, but still red on the monthly with red sell signals on the monthly and weekly. And super discretionary, a big nice move on Friday, big green, blue, and blue, but in sell signals on weekly and monthly on John Person stuff. So what did I learn from that? I learned that the markets are better, short term at least, but long term I still have some concerns. Not out of the woods yet. I will show you that volume, which often precedes price, and that's the window I'm looking at here. On the YMs, here volume is breaking, OBV is breaking above its moving averages. NYSE has started to turn up. That's a good sign for the market as well. OBV broke above its moving averages as well on the NASDAQ and on the Qs. So that's a very nice sign. AD is turned up, although still kind of at its moving average on the Dow, on the spiders, and OBV looks like OBV's at its moving average and AD is turned up. So on short-term perspective, because these are all dailies, it does look like the on-balance volume and the AD lines want to turn up on the major indexes. Sometimes I look at this on, yeah, this is better. This is, just look at the daily one, and you could see that daily advanced decline line, the spiders and OBV are now turning up, as they are on the NQs, as they're trying to do on the TFs, and as they look at the OB on this, on the Russell here. Wow, did this really move up? Excuse me, on the Dow, not the Russell, my bad. See that turning up here. So some evidence then that perhaps, you notice, I will get this to work, I promise. Well, that didn't really do what I wanted to do, did it? Well, I was going to try and show you, oh, because I've got the eraser. Never mind. But you can see advanced decline line is turned up. Let's go to edit, chart, get my OBV turned back on. And look at this OBV turning up on the Dow as well. This is powerful. If I had to bet, we've got a nice little rally coming, but I don't bet, I invest and I trade, and I'll do what the market tells me. I'm not a betting man. But for daily signals, those advanced declines at OBV look much better than they have for the last couple of weeks. Let's take a look into HGSI. We're about 30 minutes in here and got a lot to cover. So first thing I'm going to do is go down to Major Markets Plus, which are in the Woodward and Brown user groups. And I'm going to go to top-down view, which is price and volume, heavily weighted towards the last couple of days. And lo and behold, the NYSE composite comes up to the top, followed by NASDAQ and Dow. This is what I want to see as a stock investor. Don't like the fact that the Russell's lagging, although it had a decent day on Friday, and the dollar and volatility came down a lot. This is happiness to a stock trader. Let's take a look at some of these indexes. We know that there were big kahunas across the board on Wednesday, and I think a couple on Friday. So here's the view that shows the kahunas here. This is a Wednesday kahuna on the S&P. I point out that we did not have a Phoenix here occur this week. The Phoenix is our version of the follow-through day. Now we're done with that. Let's go into the simple picture here. So we've been looking at, this is the purple is the 8-day exponential, green is a 17, blue is 50, and the red are 200 simple moving averages. These are my bongos. We haven't had a Hindenburg in a long time. I leave these up here just so I don't forget about them. So what did I wrote last couple of weeks? I've been talking about how we've been in a wedge here, and it would be interesting to see if we could get back above these lower price bars trend line, and that I thought the highest risk would be we'd pull back up to here and fail. We still got quite a ways to go, in fact up to over 2,000, so 50 to 60 S&P points before we even threaten that line. That would be a nice move. You notice that this line here also corresponds with a falling 50-day moving average. So I think, from my perspective, I'm going to look for this to move up and test that 50 and see if we can break through, or will it be resistance and lead to another leg downward. But that's still, as I said, as many as a 50 S&P point rally, which would be quite nice if you still have longs in your portfolio. That's the S&P. Look at the Dow Jones Industrial Average. Same type of a picture. We broke down from a wedge. Now this has got to be resistance, and we're looking at about 300 points move on the Dow to get to that level, which would be a very nice move. If I look at the NASDAQ, a similar picture. Here was the wedge. We broke down. Now we're going to challenge it at that 50-day moving average. Again, 150 NASDAQ points. So there is some room to run here. Again, and the question will be, is this a successful retest, or are we going to come back down here as well? And if I look at the Russell 2000, you're going to see more of the same, which is we broke down, we tested, and really did test. We broke below the August lows, held, are moving back up. We got above the 8-day exponential. Lots of overhead supply here to get back up here. One might be concerned that perhaps something like, are we going to see a lot of resistance down here from this area? You know, it wouldn't surprise me. We broke out of this, and again, the same place as that 50-day moving average. So my targets over the intermediate term is to run up and test that 50-day moving average, and that 50-day moving average is still a nice move from where we are on each of the major indexes. If I look at the dollar remains struggling sideways here. Let's see if it's in a squeeze anymore. The dollar is squeezing. It looks like it broke down out of that squeeze on Friday with the bad employment numbers. A dollar in this range is probably supportive for stocks. Too weak of a dollar is going to spook people out about the market, and too strong of the dollar, or not the market, the economy, and too strong of the dollar is bad for the multinationals. So I'm okay with the sideways dollar here. The VIX has been trending down and is now sitting on the 50-day support. The trend is not your friend if you're long the VIX right now. If I'm correct that we have a nice little move up from here, then the VIX should fall further. Gold and silver, considering a sideways dollar. Gold's kind of sideways, has lots of overhead supply, still has to break above this blanket known as the 200-day moving average. And the silver also bouncing around here. Yeah, it had a great day on Friday with a weak dollar. I'll be happy when it can sustainably break that 200-day moving average. I'll become a believer. And if you don't believe in the power of the 200-day moving average, you have not been above or sustained above the 200-day moving average in silver. You've had little blips above and then quick failures going back a couple of years. So this is beautiful. If it was you have bongo reversals, elders turn green, you're okay on distribution, you broke above out of a squeeze with a pocket pivot, a kahuna, and a green candle low. Excuse me, not a green candle low, a high closed doji. Beautiful day, beautiful chart. The problem is I'll believe it when it breaks and stays above the 200-day moving average. All right, so the markets look better than they have in quite some time. That's kind of encouraging. Industry groups, we have 173. We have, as of Friday, 86 positive on the 2-day moving average up and only 4 to the downside. Do you notice anything similar about those 4 to the downside? I do. Those 4 to the downside all are financially driven. If rates stay low, financials and insurers will also stay low. But look at this. I feel like growth is back. Biotech, exploration, semiconductor, specialty pharma, MLPs, dividend players, services, renewable energy, large pharma, base metal, REITs. A lot of things that you'd expect to work started working last week. Let's take a look at some. Biotech. You know, I own some. I used to own a lot more. This has been a pretty tough shakeout. But let's show you what happens to these guys when they decide to move up. Here's Insight. Insight pulled back to its 200-day moving average, which, based upon everything I ever tell you, would be an interesting place to go shopping. It does not make money. Therefore, it trades at a pretty high multiple. Infinity, lots of volume. Earnings not out for 2 more months. Pull back into the 80s here with the biotech rec. So just to quantify that out of curiosity, in 8 trading periods, the stock dropped 33%. Now, just as quickly, at the close on Friday, the stock is up 40% in 4 trading days. This is the good, bad, and ugly of biotech. Still hasn't taken out the prior top, which is likely to be some resistance. Big volume coming into the stock. This is a company that has one of the nicest pipelines in healthcare, especially if you like cancer companies. Has a market cap of $22 billion. Gilead just took a $10 billion debt to build up its cash reserves to go out and buy somebody. This guy's expensive, but if you want to buy a pipeline for $30 billion or less, Insight looks interesting. Celgene, from top to bottom, 26%. It's only moved back up a lot less than that. It's moved back up 12.5%. Now, nice thing about Celgene, it too has a nice pipeline. It's an expensive stock. It's at $92 billion market cap. The bad news is it's been going sideways. Now, I told you I got out of my Celgene back up here. I'm actually started nibbling early in the week last week when I said this is getting ridiculous. And I bought some calls when the stock was about 110. I think Celgene's a nice player for the long term. It has great earnings per share growth. Did have a kahuna on Friday for the week. I think Celgene looks good going longer, but it's certainly in a choppy period. Vertex, deep pullback. Alexion, deep pullback. Kind of looks a lot like my chart of the week looks like, but my chart of the week is not in healthcare. A couple of kahunas down here. They got a great business. They have a drug that's well over $500,000 per year. It's incredibly effective for a rare disease. It turns off the disease, but you have to take the drug for life. And every time they get a patient, they get a patient for life. Sarepta, this is one that I also have a position in. Actually, I have a long position in short put, so I'm double long. They've got some great science in muscular dystrophy, and they announced some results here, which was a Bible gap up, and it's never dropped below the bottom of that gap, and I've been holding it since about that time. Nice move up. It had a pretty fierce pullback as well from top to bottom. It pulled back about 25%, and since the pullback in just about 3 or 4 days, it closed back up 27%, much of that news-driven with some positive data. So some of these things look better than others. Amgen's pretty beaten up, as is BioMarin. A lot of people ask me about the next two. Kite, I know Kite well. They have CAR-T treatments, which is the same as Juno, which is another immune therapy for cancer, which is hot. This is a weekly. It's really gone nowhere except sideways going back since January of this year. It's early in its life stage. It's another one that could be acquired. It's only a $2.7 billion market cap. Hard to play this. There's no direction. It's had a nice move, but at some point, sideways stocks and chop, run up to support, pull back to resistance. Perhaps you want to play that. And then Gilead, I also started nibbling this week, but I have a lot less conviction in this one than I do in Celgene. its earnings per share growth are going to start to slow down because it's maturing in the Hep C market. They're going to need to go do something almost transformative and to maintain this price as their Hep C plateaus, and I look for them to make a big acquisition. Exploration and production, these have been dead for a long time. Some of these pay nice dividends. ConocoPhillips kind of looks like it might be done going down. It's put in a little bottom here, a higher low, broke above the 50. Couple of kahunas, mobile breakout from a squeeze. Don't like the earnings per share growth, pays a 5.8% dividend. Kind of wonder where that's going to come from if they're not making money. But here's their dividend, 74, 73, 73. They continue to pay their dividend as the stock has pulled back. It's a nice company, maybe a nice time to get in, especially you saw the strength in XLE. Pioneer Natural Resources, a similar appearing chart pattern, multiple kahunas. This is a green candle low, a high closed doji here, which is also something that could be supporting a buy signal. Don't like the numbers here. Big PE, not much of a dividend. EOG, so all of these have a similar pattern. They're beaten up stocks, some of which pay a dividend, that have had major market cap reductions, stocks fallen in half, many of which look like they're putting in a bottom. I am playing here. I've got a position in Marathon Oil, same exact pattern with a kahuna on Friday, pays a 5% dividend, which is what I thought was attractive there. I also bought some BP, but I think that's an integrated. Not BP, ExxonMobil, my bad. And here's ExxonMobil. Yeah, it's integrated, same chart pattern, multiple kahunas, pocket pivots, everything green, pays a 3.8% dividend. Is oil done going down? I doubt it. Do I think oil will be higher in 3 years than it is right now, or 2 years? Absolutely. Do I think it's higher in 12 months? Yeah, it might be time to look at some energy stocks. Semiconductor devices, another group that's been beat up. Take a quick look. Micron kind of looks like an energy stock. Been beaten up off the bottom. Pocket pivot kahuna, mostly green, mobile breakout. I'm not excited by it. It does trade at a PE of only 6, which is kind of low for the stock. I don't see a whole lot of growth, but it does make money. SanDisk, everything I buy has SanDisk chips in it and memory, pays a small dividend, a couple of kahunas. When I start to see a couple of kahunas and a pocket pivots, everything turned green. I start to take notice. I don't know if this is an acquisition candidate. I don't know what the story is. It certainly had a pretty 50% haircut. Higher lows on the weekly, breaking above the 17. Kahunas on the weekly. It looks to me like something might be happening there. Qualcomm, similar type of a picture, 3.5% dividend yield, multiple kahunas. And then Intel, which has sold off some stuff. I expect it to run up to the 200, but that's not a big move here. All right. Specialty Pharma. Some of my favorite names are here. A lot of these, well, to put it mildly, these things got killed. I can't even say a lot of these got hammered. They got killed. Valiant, bouncing off the bottom. It's down from 261 to 180. A huge drop down. At some point, it's a value play, but it and others in this group are under assault about pricing. And I know Valiant's been called out because they have a tendency to buy companies, strip out their R&D and raise prices and increase profitability and take them to an offshore taxing. But look at the earnings per share growth compared to PE. I think the stock will go back up at some point. I just don't know how long it will take. Endo Pharmaceuticals, same exact pattern, deep pullback. Mallinckrodt, the ones that bought Questcore, deep pullback. We actually talked about this as a short here. It made my EdgeRater shorting screen. This would have been a great time to have shorted the stock. Anacor, don't really know the story here. Held the bottom pretty much of the Bible gap up. Doesn't make earnings. Obviously, that's a news report. I learned more about this. That's an interesting looking pattern. Looks like it wants to go higher. One of my favorites of the year had been Horizon. Well, you ride it until it doesn't work. You get back off. And I got back on. Big move from $3 in October of 13 up to $39 earlier this year in July. Clearly a big top up there on the weekly, top on the daily back there if you look. Gapped up here, exhaustion gap. And when it broke down here, the 17 and here the 50, it was clear to get out. It pulled all the way down to $16. I actually bought some more leaps. I had leaps that I sold. I bought some 2017 leaps. I think this company is going to be very interesting long term. It's got great earnings per share growth. They did a transformative acquisition of an orphan drug. We'll see what happens. They've been looking and stuck with a acquisition attempt on Depomed that they've been struggling with. Internet media. Baidu, I know John Person was talking about this one last week, and he was right as usual. High close doji last week, running up to that resistance. If it breaks above the 50, that might make it interesting to me. A kahuna there, mobile breakout, makes money but no earnings per share growth. Facebook pulled back on this once again. Higher lows with this pullback, breaks above here, becomes interesting. Facebook looks pretty compelling. Yahoo, still about the spin-off of Alibaba. And I guess this is the new Google, Alphabet Inc. Class C. Kahuna pull back below the 50, mobile breakout from the squeeze. So interesting things looking at in, you know what, Quihu is also interesting, and Cena. So Quihu, you know, this is one of these, you're buying these things knowing that you're buying off the bottom and hoping to get a bounce. Quihu is a couple of kahunas there, a mobile breakout. I like the earnings per share growth, much bigger than the PE. Demand is coming into this stock. It's been trouble for a long time after peaking at 120. But, you know, this is kind of where it broke out from in 2013. This is where it came back to in 15. It retested. You know, is this a no-risk buy? Absolutely not. Is it something that I might look at? Let's just look at Quihu, just out of curiosity. Probably expensive. Yeah, the calls are expensive, but there's a number of things that you could do here. And I'm kind of a kamikaze, so take that in mind. So the stock closed at 48. I'm going to bet it's not going to go down below here. So it's not going to go down below 41. So I could be looking at that's tough because these calls are so darn expensive. I'd probably buy stock here and not buy calls. The calls look too expensive for my taste. To buy an at-the-money call, it's going to cost me $4. So the stock would have to move $4 or 8% between now and November 15th for me to be in the money. That's a little bit rich for me. On the other hand, do I buy stock and sell calls against it and say an 8% return in 2 weeks or in 6 weeks isn't too bad. I may be playing with Quihu. The reason why I like Quihu is I love the earnings per share coming in. I think it's going higher. I think it's at a very low risk time to buy. And we're going into a strong part of the season. Not for everybody. The other one that was in here was Cena, or similar type of a pattern. Looks like it wants to go higher. Again, it's kind of feel comfortable that I'm buying it near the low. It's got earnings per share coming in. So those are two high-risk plays that I'm going to be looking at this week for my portfolio. The midstreams, these guys are all been in downtrends, but they pay huge dividends, some of them. Here is Kinder Morgan. It pays 6.6%. Two kahunas coming in near the end there. Downtrend, resistance above it here. Huge dividend while you wait for the stock to recover. ETE, 4.6. Williams Company, 6.2. Enterprise Products, 5.5. Interesting, this one's broke above the 50. Multiple kahunas. This one looks different to me, and so I always throw this into my buy watch. Why? Everything's turned green. Mobile breakout from a squeeze. It broke above the 50, had a PSAR reversal, and had a kahuna for 3 days in a row. That's pretty impressive. I like that. It also pays a 5.5% dividend. This is what I do on a nightly basis, but what I do is I take these picks, precious metals, AEM, running into resistance I would expect at the 200. It does have earnings per share growth. Most of these have been beaten down. Newmont Mining, Gold Core, Silver Wheaton, Barracks. Pick your poison. If you believe gold and silver are going up, these are all look like they're at good buy points and bases. They've been hammered. I'm not exactly sure why AEM is doing well. Actually, I have a position in it that has nothing to do why it's going well. I know it's a little bit more diversified than just gold. Continuing on our look, e-commerce discretionary. A couple of these look interesting, so I want to look at these a little bit more detail. Alibaba, not for me. One of these days it's going to reverse and go much higher. I know they had a big lockup that's now expired, and the stock actually held up pretty well. That's probably bullish long term. I'd like to see it get in an uptrend before I showed much interest. Amazon, one of the best charts out there. It's everybody said that this gap and crap on earnings back in July would be the high. They're correct. We've now broken above the bottom of that bar. I think the stock goes higher, and I have one of my larger positions at holdings is Amazon, so I hope so. Let me just say one of the beautiful things about Amazon. If you like to create income, let's say you own Amazon at $500. You could be selling November 560 calls, which is $30 out of the money right now in the 20s. Okay, so you can gain just a huge amount of premium, and I sell calls against my Amazon constantly to put money in my account. So that's Amazon, looks great. JD.com, the Chinese, I guess combination eBay and Amazon. Don't like the fundamentals, love the chart. It's funny, one day on CNBC, they were talking about all the hedge funds that put money in and the stock was getting hammered. Multiple kahunas, broke above the 50, about to break above the 200. I think the stock goes higher, and I'm going to add this to my buy watch as well. Netflix, I also have a position here, which I got on the August 24th dump day. Didn't look like it was doing anything. It looks to me like it's setting up to run higher. might be interesting to look at Amazon and Netflix from an earnings place. Let me put that down so I don't forget. EPS, Netflix, Amazon, and let's look at Apple as well. And also JD. I don't know if it has enough years. Apologize for the length of this. And then VIPS, which I'll come back to later, also looks very interesting to me. I did not look at its earnings story. Earnings not to November. VIPS has been haircutted from 30 down to 15-ish. Looks like it wants to go higher. Multiple kahunas, mobile breakout from a squeeze. Hint, hint, you're going to see it again in a few minutes. Lots of things to go shopping, which is different than the last couple of times. And then the oil services, if you're going to play here, the big two are Schlumberger and Halliburton. Ugly charts, reversal day on Friday with a kahuna and a pocket pivot. After a bingo, I like to see it move a little bit higher before I go shopping there. Halliburton, a little bit less of a decline, also kahuna. You have drillers like Noble Corporation. Oh, some of the pure drillers, Atwood. I mean, it's hard to get excited by these. They're all beaten up, but at some point they're going to be done going down. And I think I know why these are all bouncing. The rib count reduction from Friday, I think, was pretty significant. And I think that a lot of people were waiting to see enough rigs offline before they wanted to accept the idea that this market is going to start to go. Oil is going to start to firm and go higher, and perhaps we're getting near that point on the rig count. Taking a quick fantasy football update to see if I got any points out of my players this week in the first games. So far, kind of lousy. All right, and then lastly, renewable energy. Now, SunEdison got hammered. This is the old wafer. MMC became SunEdison. A lot of people like this stock. It has huge volume. If I remember correctly, 37 million shares as a 50-day average. Hammered. I think a lot of people are looking to buy it down here. It makes no money. I don't understand. However, that said, solar is moving. Here's Canadian Solar. It does make money. Look at the multiple here, 4.46. If you look historical, that's a very small multiple on solar. Solar City, JKS, this is one I like. Look at the earnings per share with growth coming in, trades at a multiple of about 6. If you don't have a solar stock, this might be a one to start playing with. A couple of kahunas. High closed doji back here at the big move up, mobile breakout from a squeeze. So a lot of stocks look good. So I went through my review, and let me put up my buy watch list that I saw for this week. And I am, my belief is that this is an up week, and therefore I've got my shopping list ready. First thing is, let's look at industry groups. Specialty pharma, semiconductors, REITs, refiners, marine shipping still looks good. E-commerce, discretionary communication. Some regional banks, especially Indian banks, looked interesting. My filtered buy list are the ones I wanted just to run by you. These are the ones that passed my filters on the John indicators as well. So let's just take a look at some of these. Bunge. I think they're a fertilizer company. Deep pullback. Nice bottom being put in here. Multiple pocket pivots. Kahuna breaking above the 50. Not a without risk buy. Earnings coming in. Pays a small dividend yield. Now, why do I like this so much? You know what? I'm going to try this out. Bunge had a PPS weekly buy signal. It's in a daily buy signal. It had a high close doji. Look at OBV taken out up on both the weekly and the daily. Notice how price was dropping and histogram was becoming less negative and positive even on as it was dropping, and mostly green down here. I like Bungie, that's why I chose it. The next one on the list, Ashbury Automotive Group. On my regular charts, you can see it's pulled down to a squeeze here. Had a pretty wide bar on Friday with a kahuna mobile breakout from a squeeze. On John's stuff, it's a PPS buy on daily. It's been in a weekly. OBV breaking out to the upside, coming out of a squeeze, like that stock as well. Makes money. Freeport McMoran, kind of a bottom pick. As you saw, some activist investors went in. I think Icon is one of them. Pull back here with a higher set of lows, breaking above the 50 here, which I think is interesting. It had a PPS buy, was in a weekly buy. OBV heading up here, not so good on the weekly. Daily and weekly bongos are positive. This is a low conviction buy, more of looking at it as a picking something off the bottom. Cal Amp, I believe this is a technology stock, communications equipment. It pays a no dividend. So this is a stock that's been in a downtrend. Weekly buy, daily buy with a high close doji, big move on OBV. Daily and weekly bongos, most of my indicators turning green. Cal Amp, CAMP, earnings I think just came out. Juniper Networks, what an oldie. So if we look at this on a weekly, we can see Juniper Networks had a nice run up, corrected, now it's moving again. On the daily, it really has a lot of power here, crossed above the 50, everything's green. Pocket pivots, mobile breakouts from a squeeze. If I look at it with my person package, I see in a buy signal, I should have picked it up on Wednesday. Weekly buy here, all my bongos are green, coming out of a squeeze. This looks interesting as well. Amazon, we already looked at, just to look at with John's stuff. It's in a daily and a weekly buy. VIPs we looked at, and we're going to come back to this in a second. Devon Energy was another one of these energy stocks that is beaten up. It's been in a person buy for a couple of weeks as it's been bouncing down here. Went to a daily buy on Thursday. OBV trending up on weekly and daily. Daily and monthly bongos are positive. PSAR just reversed as well. On the actually, my bad, that's Amazon. Let me change that to Devon. Sorry. PSAR just reversed, you could see here. OBV is heading up here. High close doji and a buy signal on Friday. It's in a weekly sell. That's the negative on Devon. A lot of these energy stocks, which have been in downtrends, are still in weekly sells. Energen. Energen is a exploration production stock I never heard of before. Notice that Energen makes money, although its earnings per share growth is down. Energen as a person signals were great. High close doji on Friday, person buy on weekly and on daily. OBV heading up. Daily and weekly bongos are green, coming out of a squeeze. You could set a buy target right above that PSAR dot. Maybe this should have been my buy pick of the week. Multiple kahunas. Don't know this company, but I'm going to make sure I watch it. It's on my buy list. I mentioned ExxonMobil. Here's ExxonMobil breaking above the 50. I think we set a 3.8% dividend. ExxonMobil had a high close doji on Wednesday on a daily and a high close week doji on the weekly buys. OBV is heading up, looks strong, coming out of a squeeze. Still like ExxonMobil. I think it was a 3.8% dividend. Bita Auto, this one I also considered for my buy of the week. This had both a weekly and a daily high close doji. It's in a daily and a weekly PPS buy. Notice again the histogram getting less negative as the price got lower and lower. OBV taken up. This stock looks great. Would have been even better to have bought it on this buy signal here when it came out of the squeeze on the 25th. but I think this is a great buy point as it's breaking above the 50, and I like BITA. Again, a strong consideration was made for inclusion with this on my chart of the week. Quihu we looked at, again, on John's indicators. High close doji on Friday, daily and weekly buys. Cena, I mentioned this one. That's not it. Here is Cena. And again, weekly buy, daily buy, OBV breaking out, coming out of a squeeze, breaking above the moving averages. You notice there's nothing up here, okay? We have not been above this point since June. So anybody that's bought the stock from the middle of July on is a winner. There are no moving averages of resistance here. Yes, there's overhead supply back here, but a lot of these people are probably out of the stock. Great earnings per share growth. We had a kahuna. We're in a weekly, daily and a weekly buy. My bongos have turned positive. OBV looks great. Histogram looks great. Breaking out here. You notice something. I said Cena, VIPs, Quihu, I believe is also Chinese. Something going on with China. Maybe people are expecting when they open up on the 7th or 8th for there to be more easing in China, and Chinese stocks are going up. Senior Housing Property Trust, here's a REIT that pays a very healthy dividend of 9.5%. 9.5%. And you look at the chart, we got a person daily and weekly buys. We've got bongos in daily and weekly. I couldn't resist this breaking above the 50. I'd put my stop probably not far away and see if I can't run that nice little dividend for a while. It's got enough growth coming in to pay the dividend. Integrated device technology, another one that's in a nice buy signal, breaking up above the moving averages here with kahunas and pocket pivots. In a daily and weekly buy, you can see daily and weekly bongo are positive, coming out of a squeeze on my trade station package. Here's a true bottom fish, DuPont. And you notice it had a daily buy come in a squeeze. OBV looks great, still in a weekly sell. And that's it on my filtered buys. Those are some of my favorite picks. So, 2 more things left to do. Let's go into my seasonality trader. Let's take a look at a couple of earnings plays that might be coming into the market. Of course, I'm going to have to update this first. Let's see. Nope. All right. So let's look at Apple. So here's a chart on Apple. Now, the problem is Apple's not been behaving this year. And typically, Apple's price goes up. It doesn't come down. And this was a 5- and 10-year predictor. So let's take a look now where we're sitting coming into this earnings call. That's not how I want to do it. Back. All right, this is better. So here's my earnings right here. Apple's in over the short term, an upwardly trending channel. It's at the bottom of its channel, close to a high close doji reversal bar. If I look down here, the time to buy is October 9th, sell November 27th, up 8 out of 10 years with an average return of 11.8%. The 2 down years were both average less than 1%. So Apple is going into a seasonally strong time of the year. Let's take a look at, let's align this with earnings to make sure it's the same. Yep. Take a look at Netflix. Netflix, over the shorter period of time, kind of going sideways here. Green tells me we're about to go into a strong period of time, not hugely strong, starting today, up 7 out of 10 years, average return of 12.4. The 3 down years were tough. They were down 6.6. So not great seasonality, but some. Let's look at Amazon. Part of this may be it's just a strong time of the season for everybody. Amazon's in a wide up channel. We're buying it in the lower half. And this tells me it's starting October 16th. I go in 8 out of 10 positive years with a 12.8% return. The point of this little exercise is that we're going into a strong season for many of the stocks that we talk about here. JD, not so exciting. All right. So the last thing I wanted to do was talk about my chart of the week, and then I'm going to say goodbye. I decided to roll the dice, and for my chart of the week for 10/4/2015, I have decided to go with VIPS, a Chinese flash retailer. Notice it's been in a downtrend, cut in half from April to now. I have sort of a higher low coming in here, 2 swings with higher lows. I'm about to break above the 50-day moving average. I had a mobile breakout from the squeeze on Friday. My forces have gone green. My daily bongo is green. The red here tells me my weekly bongo and my distribution still are ugly. The yellow here tells me to be concerned about the 50-day moving average. The green here is the kahuna, and my relative strength is turned up versus the S&P. This one has earnings. It is not without risk. So to make my risk easier, I'm not going to touch this stock unless it breaks above the 50. So my buy consideration. I've got a new PPS weekly on person. I'm in a PPS daily. This white line here is the 50-day moving average, which is just a little bit above my price. My OBV is trending up on daily, broke above the moving average. Weekly is heading up, but is lagging. In my Jeffrey indicators, you notice a mobile breakout, a pocket pivot, a mobile breakout, a squeeze, a PSAR reversal, and a kahuna force. And I'm looking for it to take out the 50 and go much higher. So I placed my buy stop a nickel above the 50 at $18.35, the white line. My stop, I decided to take midway of this tall day, and it's at $17.15, which is 6.5%. If I'd gone down to the last conditional change, it was giving it much more than I would want to give in these market conditions. My risk is $1.20 or 6.5%. I can buy 1,600 shares. For me, the key is I will not buy this stock until it takes out the 50-day moving average. If the market opens down on Monday, this is going further low. I'm also going to remember that I got a couple more days before China trades. This is a Chinese stock, and I might take profits if I get a quick move before China opens. Now, over here, I see this red dot here, a red area, is midway up the pullback in the market. So my first stop is at 1955, which is sort of a one-to-one return. And I'll take half off if I get to this point, raise my stop to break even, and let the rest run, and hoping to pick off a much higher move. So, a few other comments here. I could play VIPS a number of different ways. I could look at a 18, so I got options that are priced every dollar. I could go in for a $19 or a $20 option, risking $1.15 to $1.50. That might make sense. I could say it's done going down and look at selling put spreads, maybe a 17 and a 15 put spread for 60 cents, 60 to 70 cents, and hope the stock goes up, and I put the 60 to 70 cents in my pocket. I might look at using a synthetic position. So, for example, if I really believe in this stock for $1.45, I could buy a $17 call and sell a $17 put. Now, obviously, I'm going to try midline, so probably about $1.20. The point here being I create a risk that looks just like the stock. Stock goes up, I make money. Stock goes down, I make money. And I can buy I'm assuming I can buy it for probably $1.25. I'd be buying it at the last strike price. It doesn't have to move in my direction to make money. I like doing synthetics instead of buying stocks because I could tie up $6,000 and buy 5,000 shares. I just have to be aware that it expires on the third Friday of November, and I run the risk of a market pullback, and I better have enough margin to cover that. On that note, I'm going to say goodbye. Hope to see you in Florida next year when I do the next HGSI Doc seminar. And in the meantime, trade safe. You don't need to trade often. Trade within your risk parameters. If this market moves up, then there should be some opportunity. Goodbye, everybody. Thank you.